Hey, what's up, everyone? Just gonna give everyone a few more minutes for them to kind of join. Uh, I have the Discord open in case you guys have any question or anything like that. Just go to the main option chat and let me know if you guys can hear me. If you can see my screen, you should see Apple chart. All right, perfect. I'm just gonna give everyone like a few minutes and then we will start once I see more people joining in. I hope everyone did good. No one's swing trading anything. Yeah, Z's here. I'm not sure if he's gonna do it. Kind of asked him. He's like, not today. Yeah, that was not good. The news that came out that continues, a lot of swing plays are gonna get thrown out. All right, so just to, before I begin, I'm just gonna begin reading some of the questions. So the way I kind of like to do this webinar on level 2 is I'm just going to kind of like repeat the questions to you guys, and then I'll just go over the whole process of level 2, which is going to kind of answer some of the questions that people asked. That way, because the reason why is that level 2 is kind of complicated, right? So I can't really answer one specific question like, hey, if this happens, what do you see? So I'd rather just walk you through the whole process of how you want to take a look at level 2 and mix it with volume, time and sales, key levels, stuff like that. But if I miss anything towards the end, just let me know, and I'll try to like repeat myself and take it from there. So the first question is, when you are watching breakout or breakdown of key levels for day trading or scalping, do you usually wait for the 1 minute or 5 minute candle to close above, below your key level to enter, right? Sometimes I wait for the 5 minute candle to confirm, and I've missed a lot of the move. But when I use the 1 minute candle to confirm, I often get faked out. Okay, so Johnny, that question I'm gonna answer in this when I show you guys how to catch the breakout on this Apple play. All right, the second one is, why can't we use the active trader data and time and sales together instead of the level 2 reading with TNS, since it's exactly merged the LM2? All right, so the thing is that I use the active trader for trading my options chain, so that's why I don't like doing that. You guys can if you want, whatever works for you. But I just kind of like to have it open this way. This is basically my setup, right? So let's kind of start with what is level 2. Guys, there's another webinar that I did in the past that kind of went over this, right? So kind of watch that whenever you guys have time. So just to kind of go over this quickly, this is the bid side right here. This is the bid side right here on the left side, right? And oh, hold on, let me just fix the screen. I just need to change this. Sorry about that. All right, there we go. So, all right, so you have, this is basically your level 2, all right? So we're gonna be watching, I'm gonna kind of break down this Apple play. So the first question that someone asked me about is when you see a lot of spoof orders, right? So what are spoof orders? First thing is, you're going to see a lot of orders come up in this quantity, right? That has insane amount of numbers, like it could be 20, 30, 40, 50. And then the price is going to be very far away from the current trading price, right? Guys, just keep in mind, I have the main option chat open. So if you have any questions, or if you lose me or can't hear me, just let me know, so I'll try to repeat myself. Okay, so this number, right, is usually somewhere further away from the current trading price, right? So if you look right here, 296.06, that means that there are buyers sitting around here, right? It's very far away. And then we have sellers sitting, or there's an order sitting at 299.74, which is all the way up there, right? So to kind of confirm how accurate that is, or why there are people there, right, what you can do is, when you zoom out, right, and you can actually, let me just fix this. right? So let's take a look right here, 296, right? This is a level right here where pre-market, the stock tried to break it, got rejected, pushed back down, tried again, and as it broke above, had a little bit indecisiveness, and then it broke above, and it held through that level right at the open. Okay, so now that's why that number is showing here. That's why it is somewhat critical. Now, spoof order would be if the stock, right, towards midday, whatever, starts climbing right back at 296, right, you're going to see this order somewhere here around this side. Okay, if the quantity, the size is not 200, right, it's dropped like this, how it's showing 3 1 3, that means this was a spoof order, right? It's not really something that we need to worry about. Okay, I'm going to show you an example of this once we see the stock Apple trying to break this level. So this is an example of a spoof order. Now we're not really going to see Apple go all the way back down there, but when you practice paper trading this, you guys will probably see this in real time. Okay, does anyone have a question so far? Guys, I'm in the main option chat, so if you have any questions or anything, let me know. So if there's no comments, I'm going to keep going. All right, so the next thing I look at when I am looking at breakouts, right, is levels of fake outs, right? So the one way to kind of identify this is by looking at levels where the stock has been trying to break and it gets rejected. So the one way you want to do is you go to drawings, right, drawing tools, and there's this little box. So we're going to draw this box, which is the high 298.80, right, and between 298.80 and about 70s, right? So see right here, a lot of times it goes there, tries to break, gets rejected, and comes back down. Same thing here, does it multiple times. All right, now once you have that placed, and you know that you want to watch for a breakout of 298.80, what you want to do is then set alerts. Okay, setting alerts is very, very important when you are using level 2 to trade, because you're not going to waste your time sitting in front of the screen all day. Now the thing with on demand is I can't really show you here, so I'm going to take it off, but for the purpose of this video, let's say the stock is at 298.60, right? Now we want to watch a level between the 70s and the 80s mark. That's his 10-cent mark, right? I'm going to explain why we want to watch these levels in a bit. So you want to set an alert somewhere, enough time, giving you enough time that if you are not in front of the screen, or if you are looking at another stock, you have enough time to get back into this in front of the screen, and you're able to read the level 2 price action and to see what's going on. Okay, so let's say I know that I'm gonna be in front of the screens all day. I'm gonna set an alert for somewhere around the 60 or 65 cents. Okay, now to do that, I'm just gonna take off on demand real quick, right, just to kind of show you guys. And let's say it's right here. You right click, create an alert, basically mark price at or above. So whatever price it is that you want this stock to alert you at, that's the price that you're going to set at. Then you click create, and you're going to get like this little yellow mark, right? So this is basically telling you now that there's an alert set for this price. Whenever stock gets closer to this, and the mark price is at 298.85, it's going to set you an alert. Okay, let me just get back. Okay, now the second thing you guys want to watch is, so let's say now the stock, you got an alert and you know that you are expecting this stock to break above this particular level. Okay, now what you're going to watch is, first thing is the top bid and the top ask, right? What is their spread? Right now we have a 2-cent spread. if you watch continuously the same stocks on a daily basis, you will be very much familiar with how wide their spreads get, what happens, what kind of patterns they come up with. Every single stock you guys watch will have a different pattern of level 2, which is why there's not that many people explaining level 2, because there's just so many stocks out there that it's really, really difficult to kind of like give a base that, hey, if you have this much spread, or if you have this much bid size or ask size, this is what you should do, because every single stock is different. All right. So in Apple's case, we trade this a lot. The most I've seen the bid and ask spread getting is maybe it'll get as wide as like 11 cents. On a very, very choppy day, you'll see like 15 cents. But other than that, usually it's around 2 to 5 cent max, right? So now, as we're getting closer to the 70 mark, remember, we're watching it between the 70s and 80s to see if it can break this level. Okay, we're gonna in between this, at any point, we can see the sellers coming in and trying to stop the stock from going above. Like right here, it was at 70s. Right here, it was at 72. Over here, it was at 298.80. Okay. So just keep that in mind. All right. Now, as we have the 2 cent wide spread, another thing you want to watch is which way the bid and the top ask is moving, right? So if it's 2 cents, and let's say the next price, it changes here. I'm just gonna talk in the cent in the cents way, right? So let's say now from 69 it goes to 67. I want you guys to kind of answer this question in the main chat. And here we have 73. Okay, so it went from 69 cents and 71 cents. The bid went to 67 and the ask went to 0.73. What do you guys think that means? I don't know where you guys are typing because I don't see anything in the option chat. Orders got filled. Why do you think the orders got filled? Right? Yeah, but again, take a look. The bid went down too, right? So from 2 cents, the spread now just got to 6 cents. Yes, the spread got bigger. Now, if the spread got bigger, there's a lot of indecisiveness, right? Now, before, when there was a 2 cent spread, which is what the spread was, for example, if you're watching it from here all the way to here, the spread was 2 cents. That means that the buyers and sellers were agreeing on this price movement up. Right now that they've hit this price level of 73 cents or 72 cents, now they're not agreeing. Okay, so now you see a wider spread. Now they need to start agreeing on a price or a spread and then start moving in a direction, right? So from here, what you can see is probably they come back to the 69 and 71, right? So once alert should be put on what charts? I mean, you can put it on any chart. It's kind of the same thing. Yeah, damn, bro, you threw me off. Anyways, 6 cents, right? So you want to keep that 2 cents spread tight. Okay, don't get too ahead. We're not gonna jump in yet. Right now, we're just trying to get like put a base on how level 2 kind of shows us a breakout is about to happen. Okay, so now we have a 2 cent spread. We're all on the same page, right? The second thing you want to watch is the bids and the ask stacking up. So what that means is that now the buyers or the sellers, if they're stacking up on the upside, you're going to see the ask stacking up, meaning that the sellers are starting to build a strong wall at a particular level. So as the stock is going to get there, it's going to start getting rejected there because sellers are stacking up and they don't want the stock to go above that level. So what's going to happen is that it's going to try to break, and if the sellers are strong, boom, it's going to get rejected. Okay, and if there are buyers stacking up or the bids stacking up, that's another term, you're going to see something like this, right? Stock is going to try to break that level on the downside. Buyers are very strong. They don't want this level to give up, and it's going to bounce from that level, okay? So you're going to watch that. And then the third thing we want to watch is the size, okay? This is very important. We're going to kind of, I'm going to pause the video a bit and kind of break that down for you guys as we go closer and closer to that level. So right now the bid's at 298.69, between 66 and 69, and then at 70s we have a lot of sellers sitting there. Okay, now we want to start watching how much the ask side and how much the bid size is. Right, as it gets closer to a critical level, that's what we want to watch. The level that we want to watch that it needs to break is 298.80 cents. Okay, that's the first level we want to see it break. But we see, if you guys take a look at this gray zone, right, which is between the 70s and 80s, it's about a 7-8 cent zone. In between, any place you will see, like it could be at 74 or 75 or 76 cents, you're going to see the ask side start stacking up. What I mean by stacking up again is that the ask size is going to increase. It's going to go from 4 or 5 to maybe 10, 15, right? So that's telling us that the sellers at that level are very, very strong. Okay, is everyone with me so far? Okay, good. Yeah, I'm kind of like losing my breath here. Okay, so now I'm gonna hit play, right? And I'm gonna pause it every here and there so you guys can kind of take a look at level 2. And I want you guys to kind of see yourself. What is it that you see, and type in the chat. So I want you guys to kind of interact, so that way I feel like I'm talking with someone. Usually I have Z or someone, but today I am all by myself. Okay. All right, so I'm gonna hit play. Okay, so now focus on the ask and the bid. Another thing I want to bring up, you have to know both sides, but when you are first starting off, my shirt is off. When you're first starting off, you want to focus on one side, right? Just one side, just learn one side, because there is so much that goes into understanding level 2 that you can't really just start by understanding all of it right at the go, right? So focus on one side, learn the first side, then focus on the other side, learn that side, how that works, and then put them together. And then again, like I said in class, you guys need to know time and sales. This is something I can't really show you in on demand. It sucks. Level 2, price action, and of course a key level. Okay, so now we are going to hit play. Guys, you guys can see my screen, right? All right, so I'm gonna hit play. Now we see 72s, right? Buyers are starting to move up, right? From 69, we're at 70, 72, 73. We had an order at 11 orders at 73 cents, and the stock got pushed down a little bit, right? So it's going to be much, much quicker in real time. So right now I'm pausing it every time I see something so I can show you. That's not how it's going to be in reality. So when you do start, you're going to need a lot of practice. You guys need to be aware of that, okay? So here we go again. We're gonna hit play. 72 cents. The bids are at 4, pushing the stock back down. Okay. Now, what we want to see is we want to see a strong either rejection, or we want to see the bid size to increase in a way where the stock just continuously pushes up. Okay. Now, right here, we're going to pause. What do you guys see on the bid and ask? Okay, spread is closer. It's 1 cent, right? So let me kind of break that down. The spread between this is 1 cent. Number one, what else? Jumped from 73 cents all the way to 77 cents. Okay, so the bid side went from 73 all the way to 76. Okay, the ask is at 77. What else? Buyers being aggressive, but there's a stacked amount of sellers and spread is tight. Okay, so John basically summarized all of that. Now, right here is a critical level now, right? In between this gray zone, we've kind of found a way, we've found a level where the sellers are like, nah, you guys can't go above this, right? Which is 77 cents, right? 77, 77, 77. The ask guide is stacked up. So if you kind of add this, it's like closer to 50, right? So there's 50 orders sitting here, and there are not many at 76, right? There are some at 75, but even if you add all the 70s orders, right, it's still less than at this key level of 77 cents, right? So this is now telling us that right here, if the buyers do not get aggressive, if the buyers do not pick up on the bid size, it has a very, very, very high chance of getting rejected. Because that one has 23. No, it's, if you see right here, let me just, I don't think you watched the old webinar. So EX is the exchange, right? So the orders are going to go through multiple different exchanges. So this is saying that there are 23 orders sitting at BATS exchange at 298.77, a sell order. NSDQ 298.77, again 20 orders. ARCA 298.77, again at 3. So that's basically telling us that a lot of people out there are trying to sell at this price. Now they're just using a different exchange. That's why you see them stacked up like this. Okay, does that make sense, Jimmy? Okay, good. So now what we want to keep in mind is the sellers are about 50 over here at 77 mark. Buyers are not aggressive at all, right? So now this has a very high probability of pulling back. So this is not a very strong breakout. So we don't want to get in right now, okay? Because the ask side is very, very heavy. So I'm gonna play this, right? Just keep this number in mind. I'm gonna pause it again and give you guys a chance to kind of like, all right, so 77, right? And it got rejected, and now we're seeing a slight pullback. Okay, now we have 76, right? So if you guys look below this, you're gonna see that there are still some orders over here, right? Sorry about that. There are still some orders over here at 77. That means that the sellers are still kind of there, and they're still saying that if you come back up here, we're gonna smack you right back down. Okay, it's not that strong, right? We don't see 20s anymore, but it's still pretty strong, right? Because if there's a level that a stock gets rejected at, and then it's that level is still showing up on level 2 on let's say if it's trying to break on the upside and it's showing on the ask, that means that they are why is your volume white? Because I don't know, I just don't like having red and green. So that is something that we're going to keep a watch out for, okay? So I'm gonna hit play again, right? 75, 76. Now, what do you guys see now? 77 stacked again, okay, what else? I mean, the spread is 2 cents, so that is still not bad, because when you are starting out and you have a 2 or 3 cent spread, as long as whatever spread you start with, which is 2, 3, or 4 cents, as long as it stays within that level, right, you're fine. So like, let's say if this had been a 73, right, not 75 and 77, that would have been bad, right, because we started off with a 2 cent spread. That is our max. If it goes above that, that's when we start thinking, okay, there's a little bit of indecisiveness. We don't wanna touch this. But if it stays within the range that you've been watching the stock in, and the bid and ask spread stays within a 2 or 3 cent spread, and it doesn't go above that, you're fine. So the spread is not bad. It's still good, right? So what we see now is that the 70s, which is 75, is stacking up, right? 5, 2, 2. It's not a lot, but the 77s, half of those orders are gone, right? Those orders are not there anymore. That means now half of the people who wanted to keep the stock below this level are like, nope, do whatever you want, we don't care, right? This is where time and sales comes in, okay? Now, when you are looking at this particular setup, right, we have an order at 298.78, and we see that the buyers are a little bit more aggressive than last time, not a lot, but sellers have given up at least half of their orders, right? Yeah, no, time and sales doesn't show up properly on demand. Even level 2, it doesn't work all the time. Like you gotta keep it open on demand for some time for it to like kind of catch up. So I had this open for like 10 minutes before the webinar, just so that it can kind of move with the price action. Okay, so now right here, what you would see is you would want to see the 298.78 orders going through time and sales. Okay, for everyone who's new, time and sales kind of shows us transactions. Okay, please do not get that confused. time and sales shows us a transaction between two people. It's not someone buying at the ask, someone selling at the bid. That is a completely different thing. It is just telling us the time the transaction happened, the price, and the size. Okay, so if someone bought 100 shares at 298.75, what does that mean? That means somebody sold it to them, right? So it's going to show up as one transaction right here. You're going to have a time with seconds. You're going to have a price, whichever price it got filled or exchanged. Exchange would be a better word, and the amount of shares, right? So the difference between time and sales and level 2 is 522 is always times by 100. Okay. Color does matter. I'm gonna break that down too. I'll take off the on demand and I'll show you what the colors mean. Just give me a second to kind of like break this part down. So on level 2, each size of the bid is you have to times it by 100. Okay, bid side or ask side. So that means 21 times 100. This is how many sell orders are sitting here. 5 times 100. This is how many buy orders are sitting here. Okay. Now in the time and sales, you're going to see the actual size. So if 10 shares got filled at a particular price, you're going to see just 10 shares. It's going to show you that 10 shares were exchanged between a buyer and a seller at this particular price at this time. That's all that we're telling us, right? Just when it comes to the price part. The colors, that's a whole different thing. I'm gonna get off the on demand and I'll show you guys how the colors over here and over here what they mean, because there is a lot of bullshit stories out there. Someone who actually teaches themselves reached out to me today and asked me. He argued with me for about 10 minutes, and then I went live with him to show him that that is not right. And he's like, oh my god, I've been told something else. I was like, yeah, dude, and you're teaching something completely off. Anyways, all right, so now we're watching that 77 mark, right? So what we want to see in time and sales at this point is orders of 298.78 going in, right? So if you have 78 popping up in time and sales, you will have about a second or 2 seconds of time before that price here translates into your price action, right? So what you want to do is just like how you set up your alerts way before, what you want to do at this point is you want to get your order ready around before it enters the gray zone, right? So just like that, you know, go to your trade tab or wherever it is, or if you trade off your phone or whatever, set it up and have the order ready, right? Don't wait for that breakout. You're at that point, you could be chasing it. What happens with the premiums is when there's a key level, right? 298.80 cents. I know you guys, some of you are only trading stocks, but I know I'm 100% sure you guys are going to come to the dark side. When you're trading options and there's a key level where the stock is getting rejected multiple times, right, like this, what happens is that the premium at the money, right, when it moves above this, the delta from the put side moves over to the call side, right, and it moves over very aggressively. So when it moves over, your premiums jump very quickly, right? So if you jump in before the break of 298.80 cents, right, like at 77 or 75, and then it breaks above, and you're in with $1, your premium is going to jump up to like maybe 20 cents or 30 cents, right? But if you get in after that, now you're getting in at $1.20 or $1.30. A lot of people who scalp, they don't even wait for the stock to continue going up. They catch this breakout, right? They catch this breakout right here, and they catch that 10 cent change of at the money into the money strike, and they get out, they take the profits, and they just keep doing that, right? A lot of people still hold, but you know, the whole idea is that you try to get in before the breakout, right? That's the whole reason why level 2 and time and sales is very important. Okay, so I can't really show you guys time and sales in correlation with this, but this is something we were trading last week. I believe this was on the 2nd. So I'm just kind of like repeating everything what I was seeing. So at time and sales, you're gonna see a lot of orders for 78 cents, and then this is what happens. Now pay close attention to this. But before I hit play, I want to bring something to your attention, right? So 298.77 was our level of rejection within this gray zone, right? Now a strong breakout, this is kind of answering Johnny's question, like do you wait for the 1 minute or 5 minute fuck the 1 minute, fuck the 5 minute, whatever. You want to focus on the buyers taking over this level. Okay, 298.77, you want to see the buyers take over 298.77 or anything above that. That is a strong breakout, and you want to see volume. Okay, you want to see volume going above the average line. If you're day trading, you could use the 12 volume average or the 20. The whole idea is the volume needs to be hitting this or above it, right? So that's the whole idea of breakouts. So if you look in the previous times, even at the fake outs, right here, there was strong volume. Without volume, there is nothing. You cannot, there's no strong move. Level 2 is not going to help you. You need to be able to read volume as well as level 2. Okay, now I'm going to hit play, and you guys are going to see how the buyers aggressively take over a particular level, and then they start pushing the stock up. Just having the average volume. Yeah, I mean, I use a volume average 12. You can kind of switch it over to whatever it is that you like. I've tried 9, I've tried 11, I've tried 20. 12 kind of works for me. No, don't use stops. All right, so I'm gonna hit play, and you guys can kind of see. So at this point, we see 78 cents showing up on time and sales, right? And now you have a few seconds before this happens. I hope you guys saw that. Right now, it broke through that aggressively, and the buyers now have a full control of 298.80 cents. Right. So this was our gray zone, right? That they broke right through them. Right. So now the bid is at 298.80, which was the previous high, and they're holding that level. Now your stop loss is your mental stop loss is going to be what? Around the 70s mark. Okay. The reason why you want to keep a 70s mark is because that is where before the bidders were trying to break above. So 75, 74 is what you want to kind of keep an eye out for on this side. So if, let's say, there's a breakout and it's there's a lot of times that there's you have all the confirmations and there is a fake out, you want to have at least all the confirmations in your favor. Higher probability plays will give you a higher probability returns. Okay. And no, you don't want to have a trail stop on options. You don't want to have any stops on options at all. All right. So I'm gonna play it again. Now, what we're gonna watch, like let's say you got in before the breakout, what we're going to watch is if the bid side actually pulls back, right? So if you guys look right here, this is a level 298.75. There is a buyer there. So that means if this does come back 298.75, we can see them trying to push back up. But if they don't hold the 75s, it can come back down, and if it breaks that level, you want to get out. Don't hold it, because the premiums take a huge hit on these slight pullbacks. Okay. Are you posting this as soon as we are done? It takes some time, guys, so don't add me like 20 times. Hey, when are you posting it? It'll be posted whenever it's done. It does it automatically. All right, why is the 75 under the 80? All right, so think of this as a wall. All right, so you have a wall that, all right, if the sellers try to push the stock down, the first level of support we have is 298.80, right? If they break that, the next level we have is 75. Another level is below 75, which is 298.55, right? So these are just levels. These don't really matter right now. They matter as we get closer and closer to those price. If you are very far away from that level, don't worry about it. But when you're first starting out, just focus on the smaller things. As you practice more and more, you're going to see more and more patterns. All right, so I'm gonna hit play again. Here we go. Now we see the bids at 80. The sellers are still kind of like, they don't want to let the stock go up. Yes, the deltas get deducted on the move that if it goes against you as well. Okay. Now, all right. So there we go. So 76 is where they pushed the stock back down, right? So again, if you have a stop loss at 75 or 70, you're still good. You're still in the play. Buyers are still kind of aggressive. Sellers are there too, but it's still like a tug of war right now. Okay, so we want to see if they can push through 298.85. and just kind of see if you know how long the sellers try to hold the buyers below that level. See how the levels, the ask size increases, but as it disappears, that means the order is not real. It's just someone trying to scare us, and you just keep continuously watching that. Okay, again, we are at 79. We still have, you see this wall? This is basically a wall that they're still holding the 70s mark. Okay, so now they're pushing it right back up. The bid side is increasing. We have 10 orders sitting at 84, and they're starting to, oh, one more thing. If it's 0, that means the orders are below 100. So it could be 80 shares, 90 shares, 1 share. We don't know. It's below 100. It came up, so I just kind of wanted to bring it up. So you guys can watch it, watch this video later on. Now here we go. So now we're gonna see 85, see if it can break that. And as you see, 85s are coming up, and it breaks and it continues going up. Now you can always capture this quicker if you watch time and sales. Like if you guys look right here, time and sales is super laggy. But now since it is somewhat working, let me kind of break this down as well. I'm going to explain the colors, okay? Gerardo, there's a video on how to place orders on ActiveTrader. It's in one of the webinars that I did a couple of weeks ago. All right, so now let's go over the colors of level 2 and time and sales, okay? And I'll come back to some of your questions. Now, the colors simply mean that the order that was placed before the current order, it is higher or lower, okay? Now, you see right here, now usually there's a time here, right? So let's say this is 9:33 a.m., right? 9:33 a.m. in some seconds. There was shares exchanged at $298.87. 100 shares were exchanged, okay? The next order that got processed was below that price, right? 87 cents. The next order got exchanged at 86 cents, right? That's a drop of 1 cent. So that's telling us that now it's red because now the price is starting to push down, right? So if you look from here all the way to here, it goes from 86 cents down to 85 cents, right? Then we have a transaction, a heavy transaction at 86 cents of 400 shares being exchanged. Another color changes back to green, okay? Same thing here. Now, after 86, it's at 85 cents and the color is red. And the next order that gets filled is at 85.99, which is obviously higher than just 85. So the color is going to be green. Now, when you are looking at time and sales, right? I don't think the size is 100% accurate. There's a lot of times where you're going to see like 10s, 50, anything under 100 is not that relevant. You wanna watch numbers like 400, 900, 296, 500, 355. So let's say if the price is increasing, right? So like if we were watching this level at 77 mark and you see it's 76, 77, 77, we want to see a lot of green, right? We want to see a lot of size, increasing size, not just hundreds, maybe like a 400 popping up, 900 popping up, like the way it's giving up. And the other thing you want to see is the price of that stock moving upwards if you're trying to catch a breakout on the upside, okay? Can you explain the 78 mark on time and sales? Okay, the thing is on time and sales I can't really show you because I'm gonna hit play just to kind of show you guys. It doesn't work that well, right? 86, 87, it's very laggy. It's basically just if it flashes a screenshot, I guess, and then it just comes on to the next screenshot. It shouldn't be like this. So the way it should show is like this, right? It should be popping this way. It should be very seamless. It should be showing you the orders coming in this way. But the way it's showing up, I'm gonna hit play. You're gonna see it just literally just going to the next number. It's not really very helpful. Adam, do you hit the bid or ask as soon as the buyers took 80 cents? No, right? So I'm going to show you what to do when you are trading this, all right? So we're going to go back to, it's not going to work right now because on demand is not that great, right? So let's say you are watching the 297.50 strikes, right? You should have this level opened up at a different screen, different computer, different whatever, anywhere that it is easy for you to access this, okay? And as the stock from 290, what was it, 298.70, as it's hitting 77 again, right, you should have this order ready. Now this price right here is going to change every time, okay? And I try to get in at the mid price. If the bid and ask is very wide, so let's say, let me see if there's an example here, 10 cents, not that bad. So let's say 1380 and 1400, right? So this is something that's very, that's about 20 cent spread. It's right here. That's a little too much for someone who's scalping or day trading, because you can get in at a very higher price. You can pay very high price for a contract that is not actually its actual worth, okay? So you want to try to get in around the mid price, right? So if the mid is 259 to 262, try to get in within that price. If you think you're going to be late to the breakout, right? So this is a good example, right? So let's take a look at this. The mid price, the bid is 1380, ask is $14, right? So the mid price is already at 1390, right? And if you think that you're going to be late, you're watching this breakout, what you could do is just move this up a little bit to 92 or 93, all right? Do that. But please practice this. Do not fucking go on NAT, or which is the ask, and try to get filled. If you're going in with 40, 50, 100 contracts and you're trying to get filled with at ask, you're going to be down 10 cents on each contract times 100. That is a lot of money you're leaving on the table. I don't care how good or how much your P&L is, that's just fucking stupid, right? Do not do that, right? If your bid and ask spread is that wide, don't do that. Try to stay within this range, okay? I see so many people saying get in the ask, get in the ask. No, do not get in the ask, okay? If the bid and ask spread is tight, see, this is something that's tight, 131, 32, this is fine, right? This you can get in at the ask, you can get in at the bid, it doesn't matter. But if you have something that looks like this, a 20 cent wide spread, that is way too wide, right? You are going to enter a trade with a red P&L right off the bat, right? You guys can try it yourself. Paper trading, it might not work. Try it on your real account, so it kind of like teaches you not to do it. I'm kidding, don't do that. Do not do that at all, okay? All right. Do you find it useful to have bid and ask column on TNS to compare the execution price, or is it too much? It's too much information, Nicolo. The thing is that you're already trying to process so much information when it comes to level 2, right? Because you have to know your key levels, right? You need to keep an eye out on your volume, and then you're watching this things like the spread, you're watching these colors change, you're watching the size of the bid and the ask, and then you're watching those orders go through, right? I know that you guys right now are looking at this and like, oh wow, that's super easy. It's not, because you guys are forgetting that I'm pausing every 2 seconds, right? When you're trading in real time, the market is not gonna say, all right, let me wait for Nancy to catch up so that I'll move from here, just so that she's on the same page. It's not gonna work at all, right? So you need to work on this a lot, at least a month before you can start trying to do heavy contract sizes with your account. So does anyone have any questions so far? Colors on level 2. All right, it's the same thing. It's the same concept as time and sales. The orders are higher or lower than the previous ones for that particular exchange. That's it. It's nothing else. All right, what is the probability of the stock going up after breaking the key levels? All right, so see, the thing is, if you have your volume in check, you have a key level in check, you have watched a level that, all right, 20 minutes ago it tried to break this, there were 50 sellers here, now there are 20 or 10, now you have 4 or 5 probabilities in your favor, right? That is a higher chance of the stock continuing in your favor. But if you don't have any of that and you're just getting in, then you're basically gambling at that point. So obviously it's not going to happen every time that you get into a trade that the stock is just going to continue. There's a lot of times that we get faked out even at levels like this. It breaks a level and then it just tanks, right? Because there's news, there's a lot of things that come out that can affect all of this. But if you go in with a higher probability, you know that you have a higher chance of coming out green in that particular trade. Do you not fill your orders by clicking on the ask via active trader limit or specific price? No, I do, but the thing is, the active trader, right? Let me just take this out. Let me show you. It actually already has the mid price showing up. Okay. Where is it? 298. All right, see 298.39. It usually had no. So keep in mind the market is closed. This is going to be different. So the bid might be 298.35. Ask might be 298.45. But the mid is usually highlighted in the gray, right? So if you are expecting a breakout and you think it's gonna break out and you won't get filled here, go a little bit up and you'll get filled. But don't go up too much, like at the ask, if the bid and ask spread is too wide, because then you're setting yourself up to failure. Uriel, we actually caught this before the break. So you want to, that's the whole point of learning level 2. You want to be able to monetize on when these breakouts happen. You want to be able to catch them before they happen, right? So if you're watching, these are all probabilities on your, no, the other side.
Which other side?
Yeah, that's all right. Sorry about that. You wanna have those probabilities in your favor. So don't get in earlier and have a tight stop loss, mental stop loss. Get out, because that's the whole point of catching these breakouts. Because when the delta moves over, the premiums jump up very, very quick. Okay. Can you do a quick run through so we can see a process should be like? We just did a full run through. If you when this webinar is posted, you can kind of go back, or you can go on January 2 of this year, go at 2:30, set these levels, and you guys can actually see this happen on level 2. But again, time and sales is not going to show up. Don't bother with that. Anthony, videos on execution via phone app. I think there should be. If there's not, I will make one for you and I'll post it in Discord. Do you watch level 2 and active trader premiums? No, I don't. Do you watch? Would you enter the same as listed? Somebody take over. Would you? Once the 77 mark got hit on the second time, that is when I would try to get in again, not before that. Getting in before that would be a little bit risky play. What most people do is that, let's say the stock is getting up closer to this, we see increase in volume, right? And make sure the volume is on 5 minutes. I'm just using this as an example to kind of show you. What they do is, if they are green for the day, like let's say they're up 40 or 30% for the day and they're risking that percent, they get in before that break, and then their return is much greater because they're very far away from a key level. So that premium almost increases 30-40%. So their return is much greater. So many times I place an order slightly above the mid and active and don't get filled, and the stock runs up without me and I end up chasing. All right, so the reason why that might be is because your volume in that strike might not be enough, or there might not be enough people trading that. You want to trade something that is highly liquid. Okay. After ending the trade, after crossing key level, where do I take profits? All right, so let's take a look at this. If you're watching level 2, again, this is also something you can use for a stock making new highs. When a stock starts getting rejected at a particular level, you're gonna see the ask side starting to stack up, right? So when that level starts stacking up, get out if it was a scalp, right? So if you got in here and you just captured all of these candles, don't get greedy, right? It's getting rejected at the 90s. Get out, wait for that break again, and then get back in. Okay, do you usually hold or sell right after the breakout when the premium gets in the money? It really depends of how strong the move is. If the volume is still pushing through and the stock price is increasing, I would get out. I would not get out, I would hold. For example, in this case now, once it gets closer to 299, that's the level I want to watch, because I watched the 50-cent increments on level 2. That's like my main levels that I watch. So if you see right now, 96 cents and 97 cents are starting to pop up, and it's showing that it might get rejected here, right? So if it doesn't break this, that's where we tend to take our profits and get out and not try to, then we wait for that. Rather than the 298.99 break, we wait for the 299 break, right? Not the 98.99 cent, but it's going to show up over here that the levels, the ask side and the bid size once it gets closer to that. Justin, it was the drop in the sellers at the key point, and the orders getting filled at a 78-cent mark. Do you watch for Greeks in scalping options? This is something I already covered. You guys need to watch all the webinars. If you make a watch list of the same stocks that you watch, you don't need to continuously watch the Greeks if you know how they move. If you're trading a new stock, that's just too much work trying to put all the pieces together. So try to have a watch list of stocks that you are familiar with, so you'll know they're Greeks. Okay, so open interest is basically orders that open contracts from previous day. Volume is the amount of contracts traded for that particular day. If you're using cash account, getting in and out is limited to available capital. Yes, it is. You can, if you have 5,000, you can make 5 trades, each trade costing you about 1,000, or you can divide it up as many times as you want. But once you use up that full 5,000, you cannot trade anymore. Yeah, so once I'm in a trade, I don't really look at price action at that point, because price action is all coming from here, right? From here, it's getting translated into time and sales. Once it gets filled here, it's going over here. So I know over here, you can see this is the price of the current stock. This is where the bidders are at. This is where the sellers are at. So we know what is the price of the stock. So it's not something you don't really, I don't really take this off. I keep this on watch. Customer has a column. In time and sales, customers has a column bid and ask that we can add. It's the same as level 2 bid and ask. You can add that if you want. I just don't like to have that because it kind of confuses me too much. This is my setup. It kind of works for me. Again, everyone has a completely different way of trading. You guys try it however you like. Set it up, customize it, and take it from there. You don't have to do exactly what someone else is doing. Your own trading style could be much better than someone else. Roman, I am not Omar. Oh my God. I want to go over one thing. There's somebody just asked me a question about emotions. Okay. There's a book that I read a couple of years ago. I'll post that in the chat for you guys. Okay. So here's the thing, right? We all have different kind of emotions, and those emotions are what help us understand what kind of trader we're going to be. Okay, this is our strong point, right? We all have emotions that get the best of us. For example, right? I'm going to give you my own example. I get very, very anxious, right? So if I'm in a trade, right, I can't really swing trade something for too long unless if I'm just not looking at it. I have alerts. It alerts me, gets to a particular level, and then I get out, right? So that is a bad trade, or whatever. Another thing is I pay attention to very small details, like in just overall, generally in life, like if how a person is standing, how a person is looking, hair, like that's just something that I'm able to kind of see very, very, very well. So that is like a plus point, right? So what does that tell you about a person? That's what that tells you is 2 things. This person cannot swing trade that well, right? Because they're very anxious. So something that works well for them is going to be something like a breakout, day trading, or scalping, because they can be in and out of a trade very quick, and they're not going to get anxious or make dumb mistakes. Because every time I swing trade, emotions get the best of me, my anxiety kicks in, and I'm like, you know what, forget it, I'm gonna get out. And what happens is there's a lot of times when I'm wrong and the stock continues, and I'm like, oh fuck, right? But the other part, which is my strong point, which I focus on, it kind of helps me read level 2, time and sales, volume, and price action all in one. It kind of like helps me, and so I focused on this over time, trying to understand, like trying to put it together, and I don't, that's why you ask always the good man. Uh, so you guys want to go over your own emotions. This is something nobody can help you with. There's literally no one out there who in trading that is going to say, hey, I'm a therapist, come sit down with me, I'll tell you. The reason why is because there are certain emotions that we have that we kind of hide from people. We don't want other people to know. Only person who knows this emotion is you yourself. And if you accept kind of a person you are, even if you're a shitty person, that's totally fine. You're not gonna tell me, but just accept it, know your bad part, and work on the positives that you have. Whatever positives you have in you, focus on that, and that is going to help you understand what is your trading style. Your trading style cannot come from another millionaire trader or someone on YouTube or Instagram. It's going to come from you, within you. Damn, I sound like Buddha. All right, guys, so I'm gonna end it right here. And I will see you guys tomorrow. Tomorrow is another webinar. Um, so I hope this was helpful. Where can we find the link to this webinar again? It's going to be on the right side of, it's going to be at previous webinars, right? If you go to stage, it should be there. Usually within an hour or two, it should be there, and you guys will be able to see it. All right. All right, guys, I will see you guys tomorrow at the pre-market walkthrough. Good night. I hope none of your swing trades end up bad.